Wesfarmers. Julia Lee, walk us through some of the numbers and particularly that key sector of the food and liquor sales.
Well, we are looking at food and liquor, and it does look like in terms of like-for-like sales, we have seen Wesfarmers once again beating Woolworths, but it does look like both of the results have been buoyed by the fact that the households do seem to have more money coming through. There's the money to offset the carbon tax payment, so that's been going out to households, and that's likely to continue into mid-July. We've also seen the student assistant amounts going out as well. So all in all, it does look like consumers have had a little bit more to spend in the last quarter, and that's likely to continue into mid-July. The problem is we're still seeing the supermarket wars on, so price deflation still quite heavy, but all in all, a good result coming through from Wesfarmers. But it once again looks like Wesfarmers is winning in terms of the strength of gaining market share. Both companies have been gaining market share, but it does look like Wesfarmers has been gaining at a higher pace.
Take us through, well, what have you been eyeing most specifically at the Open apart from Wesfarmers?
I guess Caltex has been very much in focus over 2012, and that's really because of its refinery operations, and we were expecting to get that refinery review in the September quarter. It's actually come out early, and it's come out this morning. And of course, if we have a look at Caltex as a business, its earnings are very volatile because of the refinery part of its business. It also operates a convenience store. It's got that joint venture with Woolworths, and it's a marketer of fuel as well. But refinery is what the market's been concerned about, and we've heard details today that they are looking to shut their Kurnell refinery. Now, this was expected by the market, and that's really because the economics of refining oil in Australia are quite poor, especially compared to Asia or the Middle East. And if we have a look at the capacity here in Australia at either Kurnell or Lytton, the capacity at each of those refineries is about 100 to 130,000 barrels per day. And you compare it to some of the refineries in Asia and the Middle East, where the capacity is upwards of 650,000 barrels per day. So it is hard for an Australian refiner to be competitive. And of course, Kurnell was the one that was losing the most money. So it does look like Kurnell looking at a shutdown in the second half of 2014. But that was expected by the market. It will be turned into an import terminal. So the key here is whether they can now find a product and a supply agreement that is quite competitive long-term for this Kurnell import terminal to underpin the sustainability of that. Lytton, it does look like the economics are a bit better there, and that's really because of the product mix. They have more diesel demand coming through from Queensland, and that's because of the coal projects as well as the coal seam gas project. So it does look like Lytton will continue. They'll be looking at operational efficiencies there, but really no surprises in terms of the review. It's just a little bit earlier than expected. I think the market was expecting to see this in the September quarter, but we've seen it a few months early.
Julia, it's interesting. I mean, they list in their announcements the Aussie dollar, increased operating costs, lower Caltex refiner margins, very much generating, or the cause, if you like, of significant losses in terms of their refinery operations. Many people look at Caltex and go, well, you're an oil company with oil prices doing reasonably well over the period. That would be a good thing. But the point is, they have to actually buy a lot of the oil, don't they, on market, and have to buy it at these prices and then go through the refining process. So it actually is a cost for them.
That's absolutely right. And if we have a look at Caltex's earnings, especially coming through from the refining business, it's often like throwing a dart at a dartboard to try and pick where it's going to be. And that's really because of the volatility of earnings. And as you mentioned, James, that comes through from the oil price, as well as the currency movements, the Aussie dollar, and competition in this area as well. So the extreme volatility, and I guess closing down one of its refineries is going to get rid of a lot of the volatility that is involved in Caltex's shares. This is quite an unusual stock because, of course, we do see quite a major shareholder in this stock as well. But in the first half, on a replacement cost basis, we are expecting to see a profit result of about $185 to $205 million. There may be now some costs also associated with the shutdown of Kurnell, but altogether expected by the market, this should lead to less volatility in earnings that we see come through from the oil price, from the Aussie dollar, as well as from refining margins by competitors over in Asia.